Now, let's bring in our headliner for today's episode, Nick Bunker, head of research North America at Indeed.com. Nick, you're the man with the data when it comes to employment, unemployment, quit rates, and more. So, what are you seeing in this market right now?
The labor market right now in the US is extremely tight and very hot. So, if you told me back in April 2020, after we got some of those employment numbers, 20 million people losing their jobs about 6 weeks, if you told me that less than 2 years later, we'd see an unemployment rate below 4%, vacancies near all time highs, and sort of job switching rates at levels we haven't seen since the late 90s, I would have been shocked. But that's where we are. And with the high level of demand for workers and some signs that folks are returning to the labor force at quicker rates, there's some potential for much stronger growth in employment, and the possibility that at some point, potentially this summer, we're back to pre-pandemic levels on some key metrics of the labor market. So I think there's lots of possibilities. Just we have to hope that economic growth can keep chugging and get us there.
Now, what key metrics are you referring to exactly?
So I think there's two. One is just the level of payrolls. So that if you look at from jobs reports, if we keep growing at the rate we've seen over the past 3 months on average, we'd sort of recoup all the losses that we've seen since February 2020 by this summer, so June or July, which would be an incredibly quick recovery, especially compared to what we saw after the global financial crisis. And similarly, another metric I'm keeping an eye on is the employment to population ratio for people in their prime working years. That's ages 25 to 54. And similarly, if that keeps growing at the rate we've seen over the past 3 months, we'll get back to pre-pandemic levels in about June or July. So if on those metrics, if we keep chugging along at the quick rate we've been going at recently, this summer could be, a nice benchmark and getting back to where we were before the pandemic.
Nick, I want to ask you though, because I think this is something that's come up in a few of my conversations as well. Is when the pandemic hit, it's almost like people got early retirement, right? And we saw people, whether that's a significant portion of the female demographic as well leaving the workforce. So if you're saying we're almost back to pre-pandemic levels, does that mean that the people that we thought were retiring early or calling their retirement finally, or the female demographic, are they all coming back into the workforce, or is this someone else filling those roles?
So I think while in aggregate it's been a really robust recovery, there are some groups that are lagging a little bit. I think when it comes to like the gender breakdown, I think a lot of those disparities, for women's employment versus men's, some of those have faded, particularly as some of the industries that got really hit hard by the pandemic have come back. They tend to disproportionately employ women, so that could be responsible for that. Also, one factor that was leading to women's employment rates tending to lagging men's was a lot of the childcare constraints. Just the shift from in-person schooling to remote learning did have a significant impact on labor force participation and employment rates for women, but that constraint seems to be easing, and those mothers are sort of returning to employment. But then you mentioned older folks and retirements. So part of that trend is just that even absent the pandemic, baby boomers were getting older and heading into retirement age, and obviously they're a large portion of the population. So there are folks who have retired over the past 2 years who aren't coming back to labor force, and for good reason. They're taking a well-deserved retirement. But there are some folks who had maybe got pushed out of a job or were hesitant to return to one and said, I'm retired. But now, as we're in a period where the pandemic seems to be waning, there's a tight labor market, they are actually returning to the workforce. So there's some potential for that older group, their employment rates and participation rates to rise, but they're not going to be sort of the same share of the labor force or contributing as much to employment as they were in the past, just because they continue to age.
Yeah, I want to take a moment though and kind of switch gears a little bit. Last week we spoke with Eric Basmachian. He's a Seeking Alpha marketplace author with EPB Macro Research, and he kind of gave us the full breakdown of real income growth slowing down. And I think that's a big factor as well within employment right now, right? We're seeing the high quit rate or people quitting their jobs to move to a new job, potentially to get a bigger salary just so that they can try to keep up with life with the hot inflation going on. I'm just kind of wondering, what are you seeing from your side in regards to this shift that's happening of people jumping from job to job, trying to, I wouldn't say take advantage of the opportunity, but maybe instead just try to keep up with the cost of their lifestyle?
Yes. So sort of my read of the ultimate source of why people have been switching their jobs or quitting their jobs such these high rates is that there's just more opportunities out there. You know, it's perhaps not that surprising that we're seeing we've hit new highs when it comes to quits rate at a time we've also been hitting new highs when it comes to the number of job openings. A really good an indicator of sort of labor demand. And if you were to just use, say, very simply use job openings to sort of predict what you would have thought the quits rate would be, using pre-pandemic trends, you get pretty close to the rates we've seen over the past few months. So I do think that it's really sort of a pull factor there that people see opportunities and they are quitting their old job to take a new job and getting raises that way. Now, obviously, we saw those CPI numbers that came out this morning. Inflation is very high and higher than even some of the gains that people are getting from switching their job, which are quite high right now. So I think it is, this job switching is sort of in spite of the inflation, rather than sort of being driven by it.
So what do you anticipate coming down the line? I mean, as you mentioned, the inflation, I think it's the hottest in 40 years, I think is what we heard come across the wire. And obviously you mentioned the job openings as well, which we're still well over 10 million job openings, right? So if we're getting back to a close level of full employment in regards to the population, where do we go from here?
Yeah, so I think outside, assuming no sort of outside shock to the system or the labor market, it does look like the labor market's going to be continue to be very tight, and that's going to lead to workers still having some advantageous bargaining positions, and we'll continue to see quite strong wage growth. I think the question is, how much of the inflation feeds through to people's expectations when they're bargaining for wages, and that could not only pick up wages, but inflation, and contribute to it. But also the fact that the strong wage growth means that there's some continued strength when it comes to income growth and consumption growth, and that could also push up inflation as well. So I think the question here is, are we going to have wage growth stay at the levels we've seen before, perhaps slow down a little bit, and then correspondingly, is like inflation going to will it slow down? And if it does, it's going to slow down more than inflation, because while we are seeing at least on nominal terms pretty strong gains for people, a lot of those raises are getting eaten up by the high levels of inflation.
Right. So technically, are we stuck in a vicious circle? Is that the easy way to put it? With where job openings are, with as much money is in the system right now, with people fighting for higher wages to continue to buy groceries and gasoline at higher and higher prices, especially this week, right? With barrels shooting up like it did on the reports of US banning Russian oil because of the Russia-Ukraine war. I mean, is this actually going to slow down, or is this a vicious circle of where people are going to have to potentially jump from job to job just to get wage increases to try to, maintain their level of living?
So there's the possibility that job openings do trend down, and for a positive reason. You can imagine the hiring rate does pick up, and a lot of those open positions get filled. And there was, some indications that we are seeing more folks return to the labor force and pick up their job search. In the February numbers, we did see, that it does look like the labor force participation for some key demographic groups is picking up, suggesting that maybe employers are going to have an easier time filling some of those positions. And what we also saw from some of those February data is that some of the sectors that have had the hardest time filling positions have seen some of the highest quits rates. Wage growth is slowing there. Now, mind you, it's slowing from summer of last year when there were very, very fast paces of growth, and now it's sort of trending downward towards for leisure and hospitality workers, like frontline production workers, the rate's closer to 6%, which is much lower than it was in the summer, but that's still all things fairly high. So I think there's potential for some easing of these hiring constraints. Some of the bidding up of wage growth could slow down, where it's more sustainable but quite high.
Yeah, I want to take a second real quick though. You sent over this chart. I want to make sure that we squeeze this in here. I just kind of wonder, we're talking about the wage increases and we're talking about, the overall employment and everything, but kind of walk us through what we're looking at right here. And does this lead us to, does this help kind of guide us in any ways of what to expect going forward?
Yeah, so I think the quits rate, which is I think a pretty good proxy for both employees or workers' confidence and also job rate of people which the rate at which people are switching their jobs, does a pretty good job. It's like potentially signaling what's happening with wage growth. And what you see here is that for both the all non-farm establishments, but also then just the private sector, that 2021 saw a very substantial pickup in this rate, and hitting levels we had not seen before in the history of the series. So if you go back to the end of the year 2000, these are sort of a lot of the numbers we saw in 2021 were all-time highs. So that has been part of the story of the very strong nominal wage growth we saw last year. What you can see is that there does seem like there's potentially a flatlining there at sort of the end of this year, beginning of this year. These data can be volatile, so it's hard to know how much of a trend this is, but this is also only through January. And we did see wage growth in many sort of sectors temper a little bit in February. So there's potential maybe this has leveled off a bit. Now, if it levels off, this would be at rates, again, we hadn't seen before the pandemic. So maybe sort of wage growth won't continue to accelerate. It might settle out, but that would be still at a quite high level and levels we hadn't really seen in a couple decades before the pandemic.
Yeah. One last question for you before we let you go. You mentioned specific industries that are kind of lagging. I was wondering if you might be able to share any insight into what those are.
Yeah, so in terms of employment rates, sort of like employment levels, I think the clear industry that's lagging is leisure and hospitality. So that's hotels, bars, restaurants, travel. These are sectors that got hit very hard by the pandemic, and then the sort of efforts to constrain the virus. And while we have seen, in 2020, 21, and particularly so this year, employment gains in those sectors, employment is still very depressed there. So that is one thing to keep an eye on. How much can this recovery continue at these high speeds if those jobs in those sectors are replaced, or if it's going to be a shift in the composition of employment, as a lot of those jobs in that sector that were there during before the pandemic and the demand for them has shifted away, and there's new business models, and that sector might be just a less of a source of employment than it has been in the past.
Amazing. Thank you so much for your insights, Nick. Really appreciate it. You have a great weekend. Okay.
Thanks for having me.